people is proud to present the 4th season of the 40 Days 40 FinTechs, an initiative under its Include Everyone program, which is leading the way in advocating for technology that promotes financial inclusivity. Since 2020, we've profiled over 100 FinTechs, and our latest season is shining a spotlight on those breaking down digital barriers and transforming lives for the better.
Welcome to season 4 of the 40 Days for the FinTechs. Today we spotlight how FinTech can tackle digital literacy and data privacy challenges, making finance accessible and inclusive for all.
This is something that needs collective efforts because when you look at it as a solo fintech or as a solo company, you really can't pull it off.
It's collective responsibility. The reason as to why someone doesn't trust SafeBorder is they trusted another app before and they lost their money, so they don't want to get burnt twice. So as a community, how do we police ourselves as fintechs so that customers now trust all of us in general?
You know, somebody knows that an organization came in here, it taught me things they didn't have to teach me, it showed me the ropes and things like that. So then when we come back and are offering a commercial service, they're more willing to trust us because we were with them along the journey.
Digital literacy is very important, especially when it comes to adoption of financial services. For example, the MNOs, mobile money space. The agents are touch points, where people go to do cash in, cash out, buy airtime. That can be a learning point where the agent can also tell the customers about, for example, fraud, about how to use the services. So you turn that touch point into a learning outcome.
We could use the fintechs to produce more educational apps that could actually be intertwined in between the financial services.
As we push for digitization and literacy for the underprivileged, we are saying let's localize, right? Because we are speaking about new technology in English, or for example in Uganda, a lot of Luganda, because Luganda is a business language. When you go to the north, the customers will tell you, I do not understand what you communicated yesterday, simply because the language that you used does not conform to what they are used to, or that is easy for them to understand.
What we're doing at Centenary Technology Services is saying that we are partnering with a company called Sunbird AI, which uses artificial intelligence to translate languages. That way, whenever you interact with Centenary, as an example, you can interact with it in a language that you can be comfortable with. And that speaks to inclusion.
When it comes to cultural, apps now which are being developed support various languages, and with the new aspect of AI, we believe that all the languages will be available on the systems.
We carry on trainings for the people to engage all the communities to know about these technologies.
There needs to be digital literacy to train those last mile women about how to independently operate their mobile money, check their balance, transact, save, do all sorts of things on their future phone.
What Airtel has been doing is actually partnering, because we discovered there are already solutions that are being built for those people in the deeper rural areas. And for me, the innovation around the Open API, which is something that we have worked on, something that we have really taken time to build and keep it very simple, is purely to enable that.
We need to embrace universal services in such a way it would be an awesome experience for a customer to walk to an Airtel service center and they're able to access MTN. You're able to withdraw your money at an Airtel service center and vice versa. And also to embrace the services for other fintechs. If you walk into MTN, Easy Money, anywhere that you go that is a fintech, you're able to access your services just like banks have tried to do it.
At MTN Mobile Money Uganda, we've actually deployed innovative solutions that look at catering for our underserved communities. As you know, many of them do not have access to traditional financial services from banks and things of that nature. What we've done is we've partnered with institutions that are providing credit and offered them a solution where they can meet these customers' needs, especially during using mobile phones. USSD and mobile app.
The fintechs have sort of showed us that your phone can become a one-stop shop for everything. So for us, it's 3 ways. One, it's something called FlexiPay, which is available on USSD, *291#. And on that, anyone who wants to do mobile transactions, even if you don't have a bank account with us, it's something we're offering to the public to get more and more people on.
The fintechs focus on doing what they do best, but then the people who are good at an education build what they can build and then just slap it on or embed it in the existing infrastructures, I think that will be a very big game changer.
FinTech companies need to include people from diverse communities, people who are disabled, people from poor social backgrounds, such that these people can bring their different, unique perspectives to the development processes.
A very strong sensitization has to be going down to the customers so that they understand the value they're actually getting and they understand actually what they are opting into.
Now we explore how FinTech can break down barriers and empower unbanked women, offering them secure and accessible financial opportunities.
Mobile money is such a low-hanging fruit that we can utilize to push FinTech and inclusion to the last mile woman in any underserved community.
For the unbanked women at Mobile Money, we have partnered with companies like Care International. Care International is already on the ground helping women save, and now we are coming in as a digital platform which we are leveraging to our partners to digitize. So before, these ladies, for example in northern Uganda especially, were saving in a box and they put 3 padlocks.
We should make the processes easy for them. I gave you an example of my doctor. We use telemedication instead of using the website. Yes, we have the website, but we have an option where someone calls direct and they are attended to.
You'll be shocked that women actually do a lot of financial transactions, but they do it in their own way. Through the merry-go-rounds, they organize themselves, and every month or every week they meet and they put money together. For us to be able to convert them is first of all to go into that space.
Women are affected by cultural norms, so it is very important that we do not discard the very things that exclude them, but have conversations with them. Have conversations with community leaders, have conversations with clan leaders, because these are very important in forming the opinion of women about financial services.
For many women, access to these financial services is hindered by systemic issues in that does the system actually have enough space for them to participate? It's also cultural in that they don't even have access to assets and things like that.
With AgriShare, we understand the importance of women because we know the numbers. We have over 5 million farming households. Each farm household has about 5 people. That's about 25 million people who are involved in farming. With these ones, 80% are female or women. That means women are very important for AgriShare as a business, but also in the agriculture sector.
The woman in Kampala who is probably excluded has more or less similar concerns with the woman in a remote area. So using ICT, we're able to give them equal opportunity to be able to, one, drive things like savings. So we empower them financially through savings, through loans to improve what they're doing.
We've actually developed products that are fit for purpose for women, but also to support them. We've partnered with major institutions to provide financial literacy for women, but also other financial instruments like health insurance. We've done a partnership with a company called Clinic Pesa to provide maternal and female healthcare at an affordable rate.
If fintechs can figure out a way to help these underserved or unprivileged, groups of people earn more than what they're earning right now, it would be one step closer to including them.
Government has a lot of information around the most marginalized groups. So where are those groups? Who are they? What information is already available? So that instead of a fintech investing a lot of money in just trying to find out that information, it's available to them.
Naturally, fintechs are disruptors. They can do anything away from the normal. And we should be very intentional about creating things away from the normal to bring these women on board. Something accessible. If it means putting the incentives in, let's put them in. Let's be very flexible.
Women are trying their levels to see that they get educated. And when they get educated, of course, they will know about these knowledges of being involved in technology. And when we see women involved in technology, we shall see an economic development.
This segment uncovers how mobile and super apps, coupled with USSD innovations, can overcome digital literacy and trust issues, boosting financial engagement.
We're trying to connect with circles because we think that rather than going for multiple people, especially at the bottom of the pyramid or in the informal sector, is quite difficult. So we're using the path of what structures already exist. I think fintech should be looking at working with circles, working with SMEs to grow those bases.
Most of the women who are actually stay-home mothers, they actually receive some money. So it depends with how are they actually receiving this money. Are they receiving it in cash? Are they receiving it digitally? Okay, if they receive it in cash, are they empowered enough to actually be able to own accounts in digital solutions such that they can be able to save some little out of what they're actually receiving on a daily?
We have almost all the products that have been built up. The question would be, have we really been able to build and innovate for the underserved? And I think we're yet to get there. I like what M-Kopa is doing at the moment. They're giving out funds and people are able to pay for them in installments. So I think we also need to embrace that, because once everyone has a smartphone and they're able to use their phones, then what we are building and what we are innovating is eventually going to make sense.
You go to a bank and you and I might have our IDs, but very many people who don't have identification cards, who don't have passports, etc., who cannot access credit just because of that, or who are looked at in a certain way by banks, and banks say, no, for you, we don't trust that we shall give you money, or we'll give. So I think credit tech will go a long way.
FinTechs have to put into consideration that most of these users are the low-income people who have less access to the internet. You find that even if someone has a smartphone, they can't use the application. You find they can't keep their password, they don't remember their email.
We spotlight how FinTech is modernizing lending, promoting access while managing risk, and empowering the underserved.
If you look at the lending that is being done today, all the loan products that we have offered today, there's a FinTech involved. And for me, where the FinTech need to come in, remember we have customers, or we have agents, and we have merchants. Today, those are already there. We have banks that have financial capacity or muscle. What is lacking is a technical solution that bridges the gap.
FinTechs, we can innovate and have a bureau where we know that the creditworthiness of a person, the lender, and then we connect them to the borrowers. It's called peer-to-peer lending.
Most of our loan products for our customers are based on persona. So we deep dive into our data to know if Gerard is trying to borrow, who is Gerard? How much do they spend in a day? Who is Rachel? How much they spend a day, and how have they been transforming or borrowing and paying back over a certain period of time? Now, with improved credit scoring, this has helped us to give better loan offers and lendings to our partners and customers, and also it has improved our pricing.
At this point, we dive into the role of FinTech in amplifying micro-insurance policies, how it, coupled with strategic partnerships, can promote financial resilience and inclusion for the excluded.
So I like that you're mentioning microinsurance because it's important, especially for farmers and especially with climate change the way it is now. Anything can happen. And because most of our farmers in Uganda work on rain-fed agriculture, if it doesn't rain or it doesn't rain enough, there's an issue. Insurance is getting more and more important.
Insurance companies, once they work with partners that have actually worked with these customers and kind of broken the barriers, then it becomes easy for them to actually be able to penetrate the market and be able to, of course, not one person can do it all, but working together actually helps you be able to move miles ahead.
How many agents are losing money today through fraud? Many of them. Can somebody create a product to protect them? If you create a product that is reasonable in terms of charges, definitely you are going to penetrate that market. So again, we need to look at it from that perspective. There are so many insurance products that we can be able to bring up in the market.
Mobile money runs again on trust and convenience. So our customers trust us on mobile money, and we're adding microinsurance as a convenience, because before you had to sign so many 10, 30 documents to get a policy. But now, just at the fingertips, you can buy a microinsurance, you can pay for insurance. I think we all know that border borders in Kampala are always being knocked or bashed somehow, but with our platform and leveraging these customers to IO, we are able to provide insurance to the unbanked, to the margined customer, and even for our lovely border borders who are fathers and parents at the end of the day.
For telemedicine, as a service that we provide at My Doctor, to be effective, we need to collaborate with other FinTech players in the market. For example, companies that are providing credit and digital payment solutions, to be able to create a unique product that can provide a micro insurance for health situations.
If I have the money, say I'm a banking institution and I have the money, and you're a FinTech, you have the technology to do credit assessment, someone has the agent network that goes up to the grassroots level. You can come together and everyone does what they are good at doing in order to extend. So when you talk about things like microinsurance, you're looking at very excluded segments that are very hard to reach.
We identify where the gaps are in terms of reach, which we have, that's our strength, but they provide the expertise, the knowledge, the know-how in terms of the insurance product portfolio, and we tailor it based on the information we have on our customers, because there's information insurance do not have that we do, which of course is protected under the data protection policy. But we are able to use that with the customer's consent to provide them a solution around insurance that fits their needs.
So when we try and sell insurance, most people are looking at it as a foreign concept. I'm paying money in case something happens, and then if the thing doesn't happen, I don't get the money back. So we probably have to redesign how those insurance policies look. The other is maybe to embed them. So when I buy a car, for instance, if it comes embedded with an insurance policy, I'm getting an asset plus the insurance.
In this segment, we examine the opportunities and challenges that FinTech presents to modern business banking. We will discover how stakeholders can seize these prospects while effectively navigating the complexities.
Today, everyone wants to bank without entering a bank branch. So there's an opportunity for fintechs to collaborate with large institutions like banks to build that last mile delivery of services.
The documentation in the different banks is typically driven, of course, by the regulation. Okay, so when we look at the regulation today, is that it stipulates what kind of know your customer details should be able to collect to actually open up an account for a customer. So then I think for innovators that are actually coming in the space, most especially fintech, one of the things they need to start putting together is the paperwork.
I like what Equity is doing in their partnership with MasterCard. They are figuring out ways to de-risk that agricultural loan profile. I also like what Stanbic is doing with FlexiPay and helping agro merchants. I'm sure they'll get into credits very soon with that. So there are changes happening in the industry. Banks are doing something.
If you ask me what we should have done a long time in banking, was actually to say, if the customer has the basic KYC in the mobile money platform, why can't the bank use the same basic KYC to open special accounts that does not require any additional KYC? And if you look at the product that we launched in partnership with KCB called Super Saver, it is actually realizing that we already have some KYC, so we could open a low tier bank account. And with that low tier bank account, you can get people who have no bank account, people who have never banked, to be banked.
Fintechs are able to go to places we can't go, for instance. So rather than us repeating what they're doing, we could say, well, let's embed banking maybe in mobile money.
Banks cannot be everywhere. They are limited by their reach. They're limited by their entry points, where I have to come to the bank, have to provide paperwork, have to do all those things. Many of the customers, especially many of Ugandans, are not able to support that. And yet we have a base of customers already using our GSM services.
We can't do away with each other, and we are not competing, but we have more leverage, especially on people who have a mindset that banking has been for Abasoma or for the literate or for the high class.
I would want something about interoperability. Because let's be honest, the big players, because of their resources, have access to certain technology, state-of-the-art technology, and have invested a lot of money. You as a small player, you may need to leverage off the infrastructure that is already there in order for you to be able to give your services, or for you to be able to also enjoy the market.
We should open our gates to other people building so that they can come and leverage on what we've built already.
The onboarding process, the KYC collection process can all be digitized and modernized by use of technology, by use of apps, by use of USSD. When you talk about disbursements and repayments, all that can now be automated using payment rails.
We are ever grateful to our generous sponsors, the Bill and Melinda Gates Foundation, and all our esteemed partners. God bless you all, and see you next year.
Join us in this financial inclusivity revolution, presented in partnership with Level 1 Project, Cyber PLC Academy, Cross-Select Technologies, Infitex, Ideation Corner, and the Moduloop Foundation, with generous support from the Bill and Melinda Gates Foundation. Follow hashtag 40 Days for the FinTechs, hashtag Level 1 Project to learn more and get involved in creating a brighter financial future for all.